Hi, Assalamu alaikum. This is Leslie again, and in this video I would like to talk a little bit about riba, or what is normally translated as interest or usury. This term, of course, becomes significant in a context of finance and economics. So now let's come to the topic of riba. The topic of interest or usury has been of great interest both in conventional economics and finance as well as in Islamic economics and finance. The reason is because the topic of interest or usury has been quite controversial. There are basically two camps on this issue. One camp, whom we can perhaps refer to as the Reformists, or perhaps some people would prefer the word modernists, basically accept modern day interest as acceptable, something that is not forbidden by revelation. The other group, whom we could perhaps refer to as the more traditionally inclined people, both Muslims and non-Muslims, basically believe that interest is prohibited by revelation, and therefore that the financial system should be free of reliance on interest or usury. As a Muslim, I will refer mainly to the Quran, although there is evidence, of course, that usury has also been prohibited in the in the Judeo-Christian tradition as well. In fact, I remember one Muslim scholar one time visiting here in Malaysia saying that in Israel, for example, every bank has a statement somewhere in the bank which is fairly prominently displayed, let's say above the manager's office, and this statement basically says that the customers who have do business in this bank have, by virtue of doing business in the bank, have basically agreed that any extra money that they receive, any extra money that they pay to the bank, they would consider that extra as a gift rather than as anything else, I suppose, in particular interest. So there is still obviously a feeling that the charging of interest on loans may not be as kosher, if I may use that phrase, as some people would like us to believe. And of course, something similar is true among Muslims, and perhaps among some of the Christians as well, who basically identify interest with usury, and therefore something that has been prohibited by revelation. But let's take a look at the meaning of riba or usury in the Quran. Usury or riba is condemned in very strong terms, and in fact one of the verses says that those people who refuse to give up their claim on usury or additions to debt should be prepared to face war from Allah and His Messenger. So now these are pretty strong words. Now the Quran does not specify any penalty for charging interest, but I think it's pretty obvious from this particular verse that the charging of interest or usury or riba is actually considered to be a very serious transgression. So now, coming to the question, what exactly is riba in the Quran? The word riba means increase or addition. That is the definition of the word riba. The word riba also is associated with the idea of growth. So basically, in pre-Islamic Arabia, riba was the additional amount by which debt was increased in cases where the debtor failed to pay on time to the creditor or the lender a debt that the debtor previously incurred. So in other words, what we have here is an exchange of money or extra money for extra time. You might say that what we are witnessing here is a sale of time. In fact, we have heard expressions such as time is money and similar expressions that seem to indicate that time has a monetary value. However, we need to ask, is time something that is owned by the lender or the creditor? Is time something that is a marketable commodity? Does the lender or the creditor have the right to sell time? Okay, so that's one way of looking at it. Another way to look at the concept of riba is to think of it as an exchange. There are people, for example, Fazlur, Rahman and Abdur, who are considered Reformists, who believe that the modern day interest is a price just like any other price. Well, I beg to differ, because a price, an ordinary price, normally is a value attached to a product or a service, so that when a transaction takes place, a product or a service is exchanged for a certain amount of money. Money, as we know, is considered a store of value and a medium of exchange. But in a loan, we do not see that money is exchanged for any product or service. Rather, it is exchanged for another sum of money. So what we are witnessing in lending is an exchange of two amounts of money, one of them being larger than the other. Now, we can think of this exchange, in fact, as a sale of money, whereby a smaller amount of money, what we call the principal, is sold to a debtor for a larger amount of money. That includes the extra in the form of interest. And this larger amount of money has to be paid at some date in the future. So now we see that in this sale of money, as it were, two amounts of money are exchanged for each other, and there is no product or service that is being traded here. Therefore, the interest cannot be in any sense just like any other price. Yes, it is a price of money, but it is not a price of any product or a service. So I think it is wrong to think of interest as a price just like any other price. So that would be one point. Another argument that reformists or the supporters of interest make is that it would be difficult to carry on economic activity in the modern world without an interest-based financial system. In other words, there would be no way to allocate resources efficiently. Now, I have seen these arguments, and in every case that I have seen, these arguments were made on the basis of one assumption that was not clearly stated, and the assumption is that there are no such things as what we call share markets or equity markets. In other words, this argument is made on the assumption that money or capital cannot be also raised in share markets by selling shares to prospective investors. Now, in the absence of a interest-based financial system, this is how money would in fact be raised. If any businessman required investment funds to expand his business, he would simply issue some shares and sell them to the potential partners, and those people who would be, let's say, convinced by the prospects of this particular business would buy those shares and in the future share in both the profits and the losses of this business. Now, the fact that the profits are not guaranteed, unlike in collateralized lending, provides a very strong incentive to potential investors to perform what is known as due diligence, and to allocate their capital only to beginning with those enterprises which appear to show or indicate the best prospects for success. So in this way, the threat of losses, you might say, and the promise of potential profits provides very powerful incentives to prospective investors to perform due diligence and only buy the shares of those companies they believe will perform successfully in the future. So in other words, also we need to recognize that there is some risk in this kind of investment, but it is the very concept of risk that in fact provides the incentive for the so-called efficient allocation of resources. By contrast, in collateralized lending, this incentive does not exist, because banks will lend money to potential borrowers on the basis of their ability to provide collateral. In other words, if the borrowers can guarantee repayment of the loan, the bankers are generally not that interested in whether the business will be successful or not, and they don't have to be, because their repayment is guaranteed. So in other words, what we have here is a system where the resources are not allocated efficiently at all. In fact, they can be wasted on, in fact, quite an epic scale. As we have witnessed in the last 2007 economic crisis, which is known as the subprime mortgage crisis, in which the so-called collateralized debt obligations collapsed in value as a result of the fact that the people who borrowed the money were unable, the subprime mortgage, the people who took out subprime mortgages were unable to pay back their debts, and as a result the value of the collateralized debt obligations collapsed, and this triggered basically the last financial crisis of 2007 and onwards, and in fact wiped out several companies, for example Lehman Brothers, and nearly wiped out others such as Goldman Sachs and a few others. So in other words, it is a myth to claim that lending on the basis of interest allocates resources efficiently, or more efficiently even than the share markets do. So these are basically the main points that I would like to make, and I would just like to conclude by reiterating that contrary to what the Reformists are claiming, that riba prohibited in the Quran is not the same as interest, my reply to this is that riba means an increase, and as long as interest increases the debt in the first place, then it also qualifies as riba, because the increase applies both to small increases and large increases. The amount of the increase is actually irrelevant here. Both are prohibited, both a small increase as well as a large increase. So the differentiation between interest which is burdensome or usurious and interest which is acceptable is actually, I think, a spurious distinction, and it obscures the fact that even low rates of interest can lead to very large levels of indebtedness, as in fact we have witnessed in the modern economy. According to the chairman of the World Economic Forum, currently we have in the world $300 trillion worth of debt, and that represents 300% of the global GDP. So the next question is, how long is this level of debt sustainable? On top of that, we have had people noting that, for example, the Federal Reserve in the United States has been printing a lot of money and buying up worthless securities, mainly debt, by companies that did not exercise due diligence. And this is going to most likely contribute to inflation in the future, and could even be a factor in the next, hopefully not, but if any financial crisis is coming in the future, this larger indebtedness could definitely be a factor in this development. So let's all hope for the best and hope that it doesn't happen. But we must also realize that riba is, that interest indeed is riba, and therefore it should be phased out of any healthy economic system. Thomas Kuhn noted that there are certain anomalies in scientific paradigms, and I think interest is such an anomaly in the economic paradigm or theory that we have today. Just like interest can, or indebtedness more accurately, can lead to a kind of slavery, a debt slavery. So just as in the past the real slavery of people was abolished, I think we can say that even the so-called debt slavery could be, and in fact should be, abolished by transforming the financial system that we are currently using in the developed nations, and to some extent in the developing nations, that this obstacle of interest-based financing could be overcome by adopting profit and loss sharing and risk sharing as the prime method of raising funds in the capital markets. So I think that's all for today. If you have any comments, please put them down in a space below, and I will see whether I can perhaps address them or clarify further any of the points I made in this video. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.